Nada más, ¿todos listos? ¿Sí? ¿Sí? ¿Lucero también?
Sí, aquí estoy.
Venga.
Excelente.
Cuando usted nos diga.
Adelante, 1, 2, 3.
2020 has been a complicated year. The world was struck by coronavirus, and Mexico is suffering from a slow economy. No one is safe from this, not even the strongest bank in Mexico. We're here representing the Universidad de las Américas Puebla, and we're going to present our recommendation for Grupo Financiero Banorte, which we will be referring to as GF Norte. We issued a whole recommendation based on an ESG target price of 98.55 pesos, offering a 9.9% upside from the closing price of October 19.
GF Norte is a financial group divided into 6 segments, and its 2 main sources of income are interest and commissions. The banking services, insurance, and pension funds are the most important divisions, accounting for more than 90% of the total net income. However, given its relevance in GF Norte's operations, we will be focusing on the banking sector. The banking industry in Mexico is an oligopoly. It's dominated by 6 financial groups that represent more than 75% of the credit market share, which makes it very profitable. Out of these banks, 4 are subsidiaries of foreign firms, while GF Norte is one of the 2 big Mexican groups. Also, it has the second largest loan portfolio, only behind Spanish giant BBVA.
Nevertheless, it's time to address the elephant in the room. The adverse macroeconomic environment represents a challenge for the banking system. Due to the impact coronavirus has had on the economy, Mexico's central bank has continued its dovish tendency, cutting interest rates by 400 basis points. Moreover, the GDP, along with the global economic index activity, dropped intensely. We believe that the worst is behind us and the future has a much more positive outlook. So our recommendation for GF Norte is a hold, and it is based on 2 key drivers. First, a reduction in earnings derived from a rise in provisions and a drop in sources of income. And second, a financial strength due to high profitability and great capital management of the group. These drivers lead to an ESG target price of 98.55 Mexican pesos.
Due to COVID-19, we expect a rise in the past due loan portfolio index to 10%. Yet, we believe that at least half of these loans will be recovered, locating the index in 5%. So given this increase in the IMR, GF Norte will require a capital injection to cover the estimated losses. Maintaining a coverage ratio of 140%, we calculate a capital requirement of 36 billion pesos to be amortized in the next 4 years, meaning an annual payment of 9 billion. GF Norte will take 4 years to recover its 2019 net income levels. Because of the diminish in macro variables, we expect the loan portfolio to reduce in 2020. In this way, the interest income will fall by 8%. As well, commissions are related to loans and other activities, so we expect a decrease of 6% in this area. In total, the operating income will drop 33% by the end of the year.
GF Norte has historically shown great financials in profitability and capital management. The group has the second highest ROE and ROA in the Mexican market. In 2019, the mean ROE of the Oligopoly was 15%, a third-quarter part of the GF Norte profitability ratio. In comparison with banks in Latin and the USA, the group keeps being better than its peers, with a wide difference against Americans, but a closer one with Latinos.
Historically, GF Norte has had an average ROE of 18%, with a recent peak of 22% in the second quarter of 2019. This profitability has allowed the group to get stronger and more attractive to investors. This high ratio is a result of increasing margins in the acquisition of profitable firms. However, we expect it to decrease in a few years because of the economic stress caused by the pandemic. We project a terminal ROE of 15% and a decrease in the net interest margins due to the interest rate cuts.
The strong Bank of Mexico is more than just a slogan for GF Norte. Its financial strength is derived from its efficient capital usage. The group needs less capital to cover its requirements and is able to finance more projects and tribute investors. In the case of a systemic catastrophe, GF Norte could be the best financial institution facing the crisis. Its capitalization index is above the minimum required by federal law, Basel III, and the mean of the Mexican market. Also, due to the pandemic, we expect an increase in the ECAP given the required capital to cover the rise in IMO. In conclusion, GF Norte is the most solid financial group in Mexico. It has good profitability and efficient capital management. Hence, the firm is able to surpass this short-term crisis without sacrificing the long term, and is able to generate enough cash flow to pay a dividend payout ratio of 50%.
But what about risk? We detected three main risks to which GF Norte is exposed to. Market ones, such as downgrade in sovereign debt, an ongoing dovish trend in interest rate, a change in non-performing loan portfolio, followed by economic ones, including a greater drop than estimated in GDP and a bigger impact in macro variables, and operational ones that involve cyber risks that have gone up substantially during the COVID-19 pandemic.
It's all about the Benjamins. First, what is some of the information we took into account when making our valuation? A clouded economic future impacted by coronavirus and political uncertainty, as well as a value in strong fundamentals. To encompass all of this analysis, we used three equity approach methodologies that allowed us to reach our target price: the dividend discount model, an excess return model, and a relative valuation. First, we assigned 40% to the dividend discount model. The DDM was selected because, as we mentioned before, we expect a 50% dividend payout ratio. Historically, GF Norte has consistently delivered dividends. However, they will not pay dividends in 2020 for the first time in over 10 years. Second, we assigned 20% to the excess return model. Because of the importance of ROE in the banking industry and the relevance in performance measurements, this valuation was chosen. Last, but certainly not least, we assigned 40% to the relative valuation. In this methodology, we wanted to compare GF Norte to its peers and see how they stand. We used Santander and Inbursa from the Mexican side, and from the international side, we used financial groups from Latin America and the US, such as Santander Chile, Itaú, Bank of America, and Wells Fargo. These methods resulted in a price of 95.40 Mexican pesos plus our ESG premium.
Ethics are the new metrics, and GF Norte has been a leader in the implementation of ESG factors in Mexico. Our analysis of ESG is based on the belief that every firm operating in line with these factors offers an alpha performance. To reflect this theory, we graded a questionnaire of 10 points for each factor. The result of this questionnaire gives us a score, and this ESG score applies a discount or a premium over the target price, resulting in an ESG target price.
The group is rooting for the environment. It has the SEMS program, which analyzes the social and environmental impact of the companies, and it finances through loans. Also, the firm offers green bonds and eco loans to finance sustainability projects. Finally, GF Norte plans to reduce 30% of its carbon footprint by 2020 with water, energy, and waste programs. This factor adds 2% to the valuation. GF Norte is more than a bank. It is a family. The company has social programs and a foundation to help the community. Also, its workers enjoy a labor union, good remuneration, and career development programs. But GF Norte lacks international exposure, and its cybersecurity has failed in the past years with big losses. These factors add 1.8 to the valuation.
But like every family, GF Norte has some potential conflicts of interest. The board composition lacks diversity, failing the policies of its nominations committee. An anomaly is the chance of board position with some directors of other Mexican public firms. The chair of the case is that these involved directors represent 71% participation in nominations committee. Also, since the acquisition of Interacciones, the Gonzalez Family Trust and the Hangron family hold 12.6% of GF Norte's shares outstanding, being controlling shareholders. However, there is some good governance, being with a good audit and risk management and a well-designed compensation of executives. This factor subtracts 0.5% to our valuation. The results of this assessment show a 3.3% premium on the target price, resulting in an ESG target price of 98.55 pesos per share. So, Mexico might be sick with the virus, but its biggest bank seems to be immune. Thank you very much.
Thank you very much, guys. we now pass to the judges for their questions and your answers, and we start the 10-minute session right now.
Thank you for the presentation. Let me ask the first one, please. How did you come up with the list of comparables for the other banks?
Yeah, for sure. Here is our list of comparable sets. We decided to use the only two biggest banks in Mexico that are public firms, Inbursa and Santander. That's for the Mexican big banks. For the American banks, we decided to use firms that have similar models, business models, and that have similar models, like Wells Fargo, Citigroup, JP Morgan, and Bank of America. And for LATAM, we use, in the same way, banks with the same business model and same company size, market capitalization. So we use Bancolombia, Banco Santander Chile, Banco Santander Brazil, and Itaú Unibanco. That's how we chose our comparable set for the relative valuation.
Thank you. But then don't you think that you have to adjust for different profitability scenarios in each of those regions?
Do you mean adjust for? Do you mean adjust for different country profitability index?
Yes, I mean it's logical to compare Banorte to Santander, Chile, or Brazil, etc. I mean, but the US is a very different market and much more penetrated and different ROEs for most of them. So I wonder if you made an adjustment to consider that.
We did equally weighted for all we didn't adjust for the returns. However, we adjust for market size in each of the regions in order to encompass some of this. So we average for market cap in each of the regions.
Okay, because then that drags your valuation down because the US banks are trading at much lower multiples than Latin banks, and for several reasons, right? And interest rates are almost zero over there, and here are 4%. So that may be one factor, but there are more structural factors as well.
Yeah, sure. For example, for our relative valuation, we received a mixed feelings where our bank was overvalued in price to book value, but undervalued in price to earnings. So we weighted these both multiples 50-50. So we disappear a bit this phenomenon.
Okay, thank you.
I have a couple of questions, if I may. First of all, congratulations on the presentation, but I would like you, if you could address a little bit more the risk the bank is facing nowadays, especially regarding the pandemic, the deferment of payments that have been done in this year by recommendations of the CNBV, and most of it, how is the NPLs, I mean the non-performing loans, is going to impact next quarter or the fourth quarter or maybe the first quarter next year? Because as you may be aware, due to the rules in registering the non-performing loans, you have to allow for 90 days after the first on payment. So your thoughts on this, about the risk of the bank that may be facing? Because now it looks okay, now the reserves are fine, but maybe next year, first quarter is not going to be so good.
Okay, thank you for your question. And first, we estimated an IMOR of 10%, and we have estimated a recovery by half of that. So that means 5% in the past due index. And as earnings are highly dependent on the loan loss provisions, any change in this variable would affect our expected performance of GF Norte. So if there is a change in the recoverable past due portfolio, the provisions will have to change. That means increase or decrease depending the scenario. And our valuation would result as very high or very low. And well, that's how we took that risk.
We also increased the provisions. Can you go to the slide with provisions, please? We increased our provisions and assigned 4 years in which we think GF Norte will take to recover from this pandemic in terms of provisions. So as you can see, 2019, they paid around 15,000 pesos, 15,000 million pesos, and we increased that to almost double the size for the next 4 years to take this into account in order to be safe.
Yeah.
Maybe, sorry, go ahead, please.
Also, the current IMOR of GF Norte is 1.68%. So our increase in the IMOR is of almost 6 times. So we were a bit conservative in this scenario, but we are comfortable with this scenario. Because
do you have any chance of checking the numbers of the banks of non-performing loans? I don't know, maybe in 2008, maybe 2012, because those were very, very bad years for the banking system.
Yeah, sure. For GF Norte, the IMOR, the biggest IMOR in that years was of 2.5. Okay. But we believe that this crisis is even worse than that. So we decided to give it a worse scenario.
Right. Okay. Thank you.
I have a question. Now, as far as diversification, when I think of diversification in a financial group, whether it be in a developed market economy or an emerging economy, I think of a financial group as bank is one of the businesses, but when I think of diversification, I think, well, they also have investment banking, maybe some strong trading capabilities and derivatives, equities trading, and so on, a very strong wealth management division. Now, those areas may be more risky or less risky, perhaps more risky, but yet they do provide a diversification when interest rates or the macroeconomic factors that affect banking. How do you feel? How comfortable do you feel with the diversification of Banorte as a financial group in this context?
Well, we feel comfortable because the other branches of the group are strong too. They are cash generators, and well, they are well protected, well backed up by the bank. But also, as the bank is the main business, and it is superlative in net income, in the net income apportation, we think that the risk can come from here. The other branches are, yes, they have their risk, but are less imperative in our model.
Also, banking and the pensions and securities for the financial group account for more than 90% of the net income for the group. So they're diversified, but the main business is by far the bank and pensions and.
So you're not really saying, you're really saying it's not very diversified financial group. Is that what you're saying?
It's not very diversified. They depend almost more than 90% for their net income in insurance and pensions and banking and the banking sector. The trading accounts, I think, for less than 1%. La Casa de Bolsa accounts for 2%, I think. Around that number, I think it's 1.9 or 2.1, something like that. So yeah, the main, it's not very diversified, but depends strongly on its bank.
Un minuto.
Well, two questions. First, what could be the impact in the profits of the group if the government could lose the investment grade? What is the exposure in the investments of the government portfolio? Governmental portfolio.
Sure. If the government loses the investment rate, or the total portfolio of GF Norte, 23% is government bonds. So yes, it can be a really good hit to the firm. And also, if the government loses the the investment rate, almost every firm in Mexico loses that rate. So the Mexican Central Bank, Mexico, has to adjust interest reference rate. And second, GF Norte has to adjust its own debt. So it's a very good hit to our business.
Time, guys. Time.
Okay.
Thanks.
Thank you. Thank you very much for your time.
Thank you so much.
Thank you, guys. Congratulations. Very good presentation. I will ask you to use the bottom to leave the room.
Okay.
Do I stop sharing first, or?
Sorry?
Do I stop sharing?
No,
Oh yeah, you can stop sharing now. Yeah.
Ya podemos hablar en español. Creo que no está bien cargada la presentación. La veo en blanco. Nada más veo el logo de fondo.
Sí, así inicia.
Ah, ok.
Buenísimo. Venga, pues 1, 2, 3.
Doubling net income, increasing return on equity by 50%, and becoming the second biggest financial institution in Mexico, measured by assets, are just some of the results Grupo Financiero Banorte has achieved in the last 5 years, earning its slogan, El Banco Fuerte de México. Ambitious targets, a sound strategy, and a disciplined execution have made a consolidated group, which now holds the standard as the biggest Mexican financial institution. On the other hand, the financial industry faces severe challenges upon economic and political uncertainty. This has had a direct impact on the group's share price, specifically 2 events. Mexico's president comments on commissions charged by banks. Share price falls more than 30% in 1 week. COVID-19 impact brings the share price more than 45% down. It is true that the share price has almost fully recovered from the last downturn, but Mexico's GDP is expected to shrink between 8 and 10% for 2020. Even with this context, we submit a buy recommendation with a target price of 106 Mexican pesos per share, with a 22% upside under the investment thesis of Grupo Financiero Banorte, a solid group on a complex environment.
Banorte has 3 key value drivers that gives them a sustainable edge in the long run: a solid management execution, a robust diversification, and a customer-centric focus. A solid management has been fundamental to successfully navigate on a very uncertain terrain. The groups have shown their ability not only to design strategies, but to combine them with a robust execution. We can see this on 2 sides of the coin, offense and defense. The implementation of their 2020 vision has proven successful, growing net income 21% annually and pushing ROE from 13 to 20%, as well as a growing net interest margin and a resilient return on assets. Additionally, the group's cost to income has been decreasing as a result of an aggressive migration to digital terrain, which reduces their cost of their transactions compared to the branch network. The reduction in their cost of funding due to a robust increase in demand deposits and the fact that almost 40% of its total loan book is fixed rate has helped the bank mitigate the declining interest rate environment and put less pressure in the net interest margin. The group has proven outstanding results, but what really determines the quality of an investment, it is not so much about the return you can make, but how well you can handle the risks that your investment is exposed to. So the question here is, how well grounded is Banorte to handle one of the most complex environments in history?
The group has taken action to strengthen the company's fundamentals. In terms of asset quality, the group has been on the low side regarding cost of risk and non-performing loans. So far, their PDL ratio has remained stable, in part thanks to the relief programs, which gave customers a 4-month grace period. It is important to notice that only 16% of their total loan book applied for the deferral program. In terms of liquidity, the group has achieved a 6% growth rate over the last 5 years on its core deposits, from which almost 60% are demand and the rest time deposits. This, together with the bank's access to several liquidity sources, has allowed the group to navigate easily through this crisis, and it has achieved a liquidity coverage ratio 50% above regulatory requirements. Talking about capital management, the group's capital adequacy ratio, currently at 19.68%, has been boosted by carefully reviewing risky assets, issuing additional Tier 1 capital notes, and holding its dividend payment. At current levels, the capital adequacy ratio is 72% above regulatory requirements. During the second quarter of this year, almost all profitability metrics were impacted due to a 95% increase in preventive reserves, made to mitigate the potential deterioration of their loan portfolio. We expect that, given the adequate earnings generation and the adequate fundamentals that the group had before the crisis, earnings will recover strongly by the second half of the next year.
The banking business has an intrinsic risk, and Banorte management has taken a hands-on approach to mitigate it. This with the diversification of business segments through the acquisition of its different subsidiaries. This strategy has proven to be a strength for Banorte. A second quarter of 2020, 38% of net income came from the non-banking business. In the first half of 2020, the banking's net income decreased 29%, while the other business lines increased on average 32%. The diversification strength also comes from the loan book, which is diversified between commercial, consumer, corporate, and government. These strategies have contributed to diminish the risk, but also to expand the bank potential and efficiency, deriving in economies of scale and networking effects.
The 29 million client base gives Banorte an important advantage. The group's effort to have a better customer understanding with investments like the Net Promoter Score has helped them design strategies in order to provide more personalized service and with a solid backup base. As a result, they have been able to better estimate and deal with risky customers, allowing them to anticipate non-performing loans, while also improving the effectiveness of cross-selling strategies, increasing the products per customer from 1.3 to 2.2 in a 5-year period. Additionally, Banorte has scaled its effort to position for a banking business disruption, looking to become one of the best digital banks in Mexico. And one example of this is the $200 million investment on a Rappi joint venture.
Investors are giving more weight on ESG factors. Almost 1/3 of the total US assets under management are using ESG criteria. On governance, Banorte Executive Board is made up of 14 council members, from which 9 are independent. On social matters, Banorte has been recognized as a great place to work. However, a weak woman presence in top positions and executive board can be seen as an opportunity area. The group is the only Mexican financial institution that belongs to the Paris Agreement on Climate Change, and it is aligned with the United Nations 2020 and 2030 agenda.
Banorte faces many risks. The ones related to its core activity, credit and liquidity, market ones, such as the Mexican peso and the fluctuation of the interest rate. But the most imminent one is the economic and political situation that Mexico is facing with the arrival of the pandemic and the lack of investors' confidence in Mexico.
Our valuation is based on a weighted combination of intrinsic and relative valuation methods, which include residual income model, discounted cash flow to equity, and comparable multiples. In a residual income model, the value of the firm is mainly a function of the spread size between return on equity and the cost of equity. Weighing this model with a 40% to rely on proven return on equity instead of projections. This to work around the shortcoming of dividends in the near term and because of the high growth potential of the market. The discount rate is the cost of equity because the cash flows being discounted belong solely to common shareholders due to the nature of banks. We used a discount rate of 14.31% and a long-term return on equity of 20%. According to this model, Banorte computes a 98 Mexican peso per share value.
For the discounted cash flows to equity method, we built a model in which we attempt to measure the actual cash generation available to shareholders after deducting the core activities of the bank, such as lending, and after deducting the operational cost and capex. We wanted to track the changes in their cash flows with a specific focus on balance sheet items, and we decided to give a 30% weight to this method, given the complexity of estimating last-minute management decisions in terms of cash usage and projections inaccuracies due to current conditions. Under this model, Banorte computes a price of 117 Mexican pesos per share.
We weighted the relative valuation with a 30% to work around forecasts and rely on the market's perspective in the industry. We compared Banorte to national and Latin American peers by using just equity multiples. Therefore, Banorte shows an attractive price of 105 Mexican pesos per share.
Un minuto.
With the mix of these three valuation models, we arrived at a target price of 106 Mexican pesos per share.
It is clear the group's current performance is under stress, facing one of the most complex environments in history. But it is also true that it arrives to these fundamentals and has taken action to mitigate negative impacts without giving up its aggressive profitability and growth targets. We believe the group has proven to be more than prepared to successfully overcome this short-term challenge and continue delivering long-term value above the Mexican market. Thank you very much. We're open for your questions.
Great. Thank you very much for your presentation, guys. I will reset the clock so we can start the Q&A session. So yeah, 1, 2, 3.
Okay, I have a question. Why do you think the other banks you mentioned, Banorte's capitalization is almost 20%, way above the, quite above the minimum requirement. But why do you think the other banks can work at a lower level of capitalization than Banorte, its competitors?
Thank you for your question. Well, of course, there are many banks that we compare Banorte with the capitalization, but Banorte has done a lot of effort in increasing that capitalization, mostly through Tier 1 capital, but other banks are focusing more on making reserves, which is also helpful, but Banorte is making more strategies, which will affect their short-term profitability, but we are sure that they will have a positive outcome on their long-term strategy.
So they feel their risk is higher than the other banks. Is that the case? That's why their capitalization is higher?
No. Well, they have really measured the risk. They know a lot about their clients, so they know exactly almost exactly who is gonna pay and who's not. So they have increased their reserves on that scale, but maybe other banks are just increasing how their profitability can handle.
Yeah, and just to add a little bit, we think that Banorte increased bigly their capitalization, mainly because because they want to give a better room to maneuver. They want to give a very certain terrain for investors. So as Rafael Arana mentioned in the last conference, this amount of room of capitalization allows Banorte to more easily navigate on these uncertain times compared to their competitors.
Thank you.
Lastly, I would just like to add that they know that this could be a short-term measure that could impact profitability, but they've taken this stance to make sure long-term growth and long-term value is solid.
Okay.
Good.
Another question. Banorte has the biggest Afore in Mexico, and you told us its Afore is around 27% of the profits. But the Mexican Congress are approving a reform that maybe could put a limited in the commissions of the Afores with an average of other countries, and it is around 50% of the current commissions. What could be the effect in the total profit of the group, please? And of course, the price of the share.
Thank you very much for your question. Yes, it is true. Banorte has scaled its Afore business, which now represents a more important part of its business. But the thing is that Banorte, as we said, the diversification is 62%, around 62% of net incomes from the banking segment, and the other 38% around the other business lines. No, like the Afore, the insurance business, which the second biggest one is the insurance business. So these measures on the Afore, it obviously impacts heavily the visibility or the future of Banorte, but we think that the Afore has also given another strength to the it has proven profitable, but it has also given another strength, that is to increase the customer base, which has helped them get on networking effects, economies of scale advantages. So we think this impact could impact heavily, especially this part, but specifically the Afore business is not larger than 8% of the whole net incomes from the group.
Okay, thank you.
I have a question, if I may. Thank you for the presentation, but I was wondering about your insight for next year's risk for the bank. You know, we have the pandemic, the economic environment is not good at all. They have been building reserves, as you have already stated, they are well capitalized, but you have the risk coming forward. Next year, they're involving in some strategies, digitalization, which is going to imply a big capex to maintain the competition against other peers. And mainly about Pemex. What do you think about Pemex, the exposure of Pemex in Banorte's?
Thank you very much for your question. Well, we know that Pemex do represent a risk because it affects directly the public Mexican finance. But what Hacienda did of renegotiate the Pemex debt was incredible. First, because we think that, well, we all know that Pemex has junk bonds, but there's a lot of liquidity in the market, and investors are willing to take that risk because there's liquidity. They want that return. They are willing to take that risk, and really, for example, also we need to add that there's not so much exposure with the government. The relation is with the government, but if the government is doing some actions to have a better scenario, like the one I said, that they renegotiate the debt, we don't think that that's completely a risk for Banorte. Well, some kind, but Banorte is really strong, and they are mitigating, for example, their exposure to government. Their exposure to government, especially because they have the lowest past due loans of 0.1%, and also they have, for example, a lot of fiduciary guarantees, and the payments of that loans to the governments are going to be paid with the public resources. So even that Pemex is junk, for the investors, they are willing to take that risk. There's a lot of liquidity in the market.
Yeah, and for your first question in terms of risk and the reserves and the uncertainty in the economy, we think that the reserves that Banorte has already done in the second quarter will be sufficient to cover all these new non-performing loans. So we definitely think that the second quarter was an outlier in terms of profitability, because in the second quarter you could see the real effect of the reserves in their income statement, in earnings. But we do believe that for the next year, profitability will be almost recovered. And as we can see in the last earnings call for the third quarter, earnings just were boosted enormously because of these reserves that were done in the second quarter. So we do think that the risk is already covered, and we are just very confident in the management of Banorte.
And just to add, as we said before, Banorte has taken action in the near term in order to be in peace, in order to navigate easily in the crisis with the earnings, to keep investors at there's attraction. So they have taken actions, they have taken hands-on approach on it. So we think they are ready. They are more than confident.
Okay, thank you.
Can you discuss their ESG strategy, please?
So yeah, thank you for the question. Banorte, about ESG, first they have like a tech strategy on social and environmental matters that it is composed by 3 axes: our people, our planet, and our business, responsible business, sorry. So the group in general is like really well sustained with a strong and solid executive board that has been recognized with awards and with great decisions. And you can see that the members that compose this executive board are people with expertise in the diverse business lines. Also, they have many metrics. I can show you, I want to show you one appendix about ESG. Sorry. So here is, these are some metrics according to some Refinitiv data. They have A grade on everything. If I should mention any weakness, or if we could say weakness, because it still has like an A grade.
Sorry to interrupt, but it's already time. So we said like in the 10 minutes. So we need to stop it here to be fair with the other teams.
Okay.
Yeah. Well, thank you very much. I will pause it for a second. Ya estamos. Tengo mi cronómetro reseteado. Entonces, a la de 3 pueden comenzar. ¿Listos? ¿Sí? Va. 1, 2, 3.
Good afternoon, and welcome to the TESUL Mexico City campus presentation. For compensating adequately the risks taken by the investors, we issued a whole recommendation for GF Norte, with a 1-year target price of 114.25 pesos, representing a 7.88% upside from the 17th of November price. To begin with, the financial group has over 1,700 branches, ranging from retail banking to insurance and pension funds, and more than 21 million clients. Is a major credit card issuer for the government and the second most important bank in mortgage loans. Moreover, is the second largest financial group in the country, with the greatest diversification of business in the market, and continues prioritizing the asset quality and its liquidity position. The 3 main components of the net income are the bank, insurance, and pension fund, representing from the first semester of the year 64%, 17%, and 6% respectively. GF Norte is characterized for having one of the highest ROEs among the Mexican banks and the highest Tier 1 capital ratio.
Within ESG, GF Norte developed an internal sustainability index to measure the risk exposed to these factors. The institution is broadly in line with the industry indicators and the local peers average. The result in our analysis gave a 55%, and within the benchmark, they are on the 6th place with 44.3 points. Regarding credits, Banorte should aspire to obtain projects inside the C category, meaning that they threaten the environment and society less. In electricity consumption, there's a positive variation of 2.98% in the last year, going in line with the increment in banking branches. For 2021, they are going to start with 70% renewable energy supply and continue the alliance with Waste Carpool. For sustainable development goals, the group is focused on quality education with financial courses. For 2019, the workforce percentage was 50% for both women and men, with very limited female presence in management and other directive roles. Historically, there have only been 7 women at the same time on the board. Nowadays, there's only 1 out of 14 members. The board is still in process to select who are going to confirm it next. GF Norte should be recognized for these efforts on the ESG factors. However, there are still opportunities for improvement.
Now, let's start with the financial analysis. First, banking is an industry highly driven by macroeconomic factors. That's why we consider that GDP, interest rate, and inflation to be highly correlated with Banorte's performance. These factors directly impact the firm's funding and lending rate, but funding rates will continue to be more stable due to the concentration in the demand deposits. Banorte and the whole industry has been doing well in the past years, quickly adopting Basel recommendations, increasing profitability and efficiency, supported by the country's high lending rates and a rapid technological adoption. For the future, we estimate a growth in the net interest margin, mainly driven by a rapid recovery in the bank's ability to produce profit from its earning assets, and a past due portfolio that will increase sharply in the next year, but then return to normal levels due to the recent write-offs, a strong capital position, and allowances generated by the firm, therefore lifting profitability.
GF Norte has had a steady dividend policy from 2015 to 2019, keeping their dividend payout ratio above 40%. Tier 1 capital ratio was always above the required standards, no less than 12%, and allowances didn't surpass 17% on growth. This year, however, for dividends, we expect no payment until 2022, with an extraordinary dividend. Tier 1 will jump to more than 17%, and allowances will grow an outstanding 50% in 2020, and then decrease so they remain stable for years to come. The group will continue to be presenting value destruction in the immediate future. This is explained by a cut in dividend payments, high capital requirements, and a weakened economy. Zooming out, ROE will recover steadily, mainly driven by net profit margin.
There are multiple relevant outcomes of the pandemic in both the short and long run. Regarding assets, we saw a surprising increase in consumers' loans in the third quarter, suggesting more willingness to spend. For the mortgage loan, central bank interest rate reductions encourage supply of cheap loans. In the long run, rates will eventually increase, mainly driven by a slow recovery in Mexico's GDP. For commercial loans, we have seen that big corporations in the first 2 quarters of the pandemic demanded more credit to finance their operations. Finally, Commission Special Accounting Criteria facilitates banks' operation in 2020. However, GF Norte will experience more defaults in 2021 as the change in the accounting criteria will expire. Nevertheless, there is evidence that the negative impact is controlled. Preliminary results indicate that approximately 64% of customers are paying their debts on time and form.
Now we'll demonstrate why we are issuing a whole recommendation. First, GF Norte is currently overvalued relative to a sample of comparable companies, but at a high price to book value and a high return on equity that may continue decreasing. For 1 year target price of 114.25, we used a blended valuation of 4 models, which weights were derived from the following considerations. We assign a 40% weight to a residual income model because the book value is closer to the market value in this particular industry. Furthermore, the model directly reflects the difference between return on equity and cost of equity. Next, we assign a 35% weight to the discounted cash flow model because it is a theoretically robust model that does a good job capturing growth prospects. While relative valuation model is widely accepted and valuable, we only assign a 15% weight to that model as the comps do not have a strong resemblance with Banorte's revenue mix, asset size, market cap, among other characteristics. Also, we included a BLACK-SCHOLES-MERTON model to capture the volatility in potential equity values. But due to the wide range of the target price simulation, it was only given a 10% weight. Due to the current uncertainty and volatile behavior in the equity markets, we decided to have one cost of equity for the forecasted periods and other one for the terminal period, both made under a comprehensive model. On the other hand, for the terminal growth rate, we have to emphasize that the bank, especially Banorte, tend to grow at the GDP growth rate in the long run. But due to the clear opportunities to bank almost 40% of the population and allow adoption of financial services in Mexico, we decided to add a premium to have a G of 2.81%.
The residual income model yields a target price of 121, with a constant terminal forward ROE of 17%. Due to the oligopolic industry in the country, we consider a persistence factor of 1. The models show a negative residual income for 2022, going positive until 2023. Moreover, we ran a sensitivity analysis. This yields a bullish scenario of 131 and a bearish scenario of 112.
For the discounted cash flow, it yielded a target price of 120. In normal situations, we know that DDM is preferable when valuing financial groups. However, we choose DCF given that current unexpected dividends do not appear to reflect adequately the bank's profitability, and there is also excess capital. The purpose is naturally to isolate free cash flow to equity, and net income is a good starting proxy. We forecast lower provisions and higher operating income. Finally, we subtract equity invested in regulatory capital as it represents less cash flow to shareholders. For the relative valuation, it gives us a target price of 91.07, and we have two criterion: revenue mix and market capitalization. We found that after the third Q, the target price is being pulled down since Jefe Norte is trading relatively higher than the industry, specifically in price to book value, that is 1.33, or 35% larger than the industry mean. Finally, the inclusion of the Black-Scholes merger captures adequately multiple scenarios and asset volatility in a non-dividend scenario. The Black-Scholes merger adapted to bank valuation calculates the equity value 1 year forward, as it captures the difference between total assets, that is the underlying, and total liabilities, that is the strike price. Therefore, the equity is the payoff of an European call option. Given that the company has considerable equity, this is basically a deep in the money call option.
Wrapping up, the company is not a buy because the rally has already occurred and there is an excess of capital. However, it's not a sell because Jefe Norte still has potential to grow and the bank presents a strong balance. Therefore, for compensating adequately the risks taken by the investors, we strongly advise to hold. Thank you very much, and we're open to your questions.
Thank you very much, guys. Great job. I will pass it to the judges. Just let me reset my stopwatch. Just a second. So we open the floor for Q&A. Judges, 1, 2, 3.
Thank you, guys. Can you address your thoughts on ESG for Banorte, please?
Yes, we consider that the performance historically has been improvement. Against the peers, there are still opportunities, and that's why we're not saying that we found problems inside the ESG. We are saying that we find opportunity areas to increment the ESG factors.
Okay. I have a question. Sorry. A question.
Alex.
Yes. I have a question. First. Wait. I have a question about the cost of funding. Outside of the core deposits, how does the cost of funding of Banorte compare with the other competitors? Just to give you an idea of what I'm thinking. Banorte has bonds in New York. They're placed in New York, placed in New York in the Eurobond market, and they're paying a coupon of 7.265% per year. Now, I haven't seen the bonds of Citibank, CDMX, or of BBVA, Santander, but I would say that the cost of those bonds for those other banks are probably about 2 or 3%. Could you give me an idea then of the cost of funding outside of core deposits?
Well, even though Banorte is a firm with high demand deposits and the core deposits, we also know that it relies heavily on the bond market. And yes, it has depth outside Mexico, which makes the funding cost a little bit higher than the industry. But the funding rate, the weighted average funding rate of Banorte is just between 6% and 7%, while the industry mean is between 5% and 6%. For the special case of Mexico.
Okay, very good. That's a full 1 or 2 percentage points difference in the weighted average cost of funding.
Ceci.
Excuse me, that was a question?
No, I'm just reaffirming what you're saying.
Yeah, no problem.
Okay. Yeah,
no problem.
I have a question. It's a quick one. You said that the credit origination in the bank was increasing. But how do you reconcile this increasing credit origination and income coming from credit, since the market, the credit market offered by banks is shrinking in Mexico, mainly the consumer part? So you said that more people were willing to spend more and they were willing to take more credit, but that isn't the numbers that Mexico is facing. How do you reconcile this? Why is Banorte different from what is happening in the market?
So let me understand your question. You're talking mainly specifically for the consumer, so for the consumer portfolio, the historic movements and the forecasted movements. How do we forecast them?
No. In your presentation, you said that the credit was being increased, and that was a sign that there was more demand from credit, as if I correctly hear what you said. But in Mexico, the market is shrinking. The last numbers are very, very worrisome because the consumer credit in Mexico is shrinking. So I was wondering, why was Banorte different from what is happening in the market?
Okay, well, yeah, exactly. We have many types of loans. One of them is mortgage loans. And what happens with mortgage loans was that an decrement in interest rates caused an increment in the supply of cheap loans in a specific debt area. So we forecast more movements like this one shown in the graphs.
Mm-hmm.
What is the forecast of the insolvency portfolio rate in your model? The past due portfolio projection.
Yeah, our past due loan portfolio is forecast to not to be that great in 2020, but we forecast an increment for years to come from 2021 to 2021 to 2024.
Okay.
If we have time for more questions, maybe I would like to ask, what is your assessment of the risk that the bank is facing? The next year is going to be very tough. Your thoughts on this?
Yes, thank you for asking that. According to the credit risk, Jefe Norte's performance on the worst part of the pandemic lockdown, when all the activities were closed and many people lost their jobs, was considerably good because they have been prioritizing the liquidity since the beginning. So we consider that in 2021, yes, they face the risk of an increase in past due portfolio, but the firm is well prepared to face it. About the AFER regulation, by the application of this regulation, the impact will be moderate. Nevertheless, as the application is almost certain, the firm has already started taking measures to mitigate the impact and adapt.
Okay.
But following up on the question of an assessing, that's why you're recommending hold to a certain extent, right?
Yes, because of the capital requirements and the high liquidity that they must keep having to meet all the possible defaults.
Okay, very good. Thank you.
The Mexican Congress are thinking to put a limit in the commissions of the Afores. What could be the impact, the profits, because the new limit could be the 30% of the current rate of commission in the Afore?
It will have an impact in Jefe Norte since this part is being in the top 3 revenue mix.
Okay.
Was there anything in the composition of the board that you found unique or uncomfortable?
Yes, we found that in the board there's only one woman. Nevertheless, we also recognize that they are working on selecting the next members for the board.
Okay.
How is the exposure to government in the credit portfolio?
Yes, Jefe Norte is the greatest government lender, and it considers CFA and Pemex in the case they enter into default. The impact would be important. Nevertheless, the probability of repayment is really low because that debt is backed up by the government.
And what do you think about the government exposure after Interacciones was bought?
Un minuto.
Yeah, we think that the acquisition of Interacciones was mainly because of that reason, in order to have a bigger exposure to government spending and in general to increase their government loan portfolio.
Okay. I have no more questions. Thank you.
Also me. No more questions.
Okay. Perfect. I will pause the recording now. Listísimo. Entonces, les doy la indicación a la de 3, comienzan y les doy el aviso cuando les quede un minuto, tanto en esto como en el Q&A. ¿Les parece?
Claro, gracias.
Bueno, entonces, 1, 2 y 3.
Your savings, your investment, your car insurance.
Your mortgage, your retirement fund, your money, your safety.
Each one of these important steps of everyone's life can be taken care of by one single institution. That institution is Grupo Financiero Banorte, the second largest bank in Mexico.
Good afternoon. We are the team representing Tec de Monterrey Campus Querétaro, and we will show you why Grupo Financiero Banorte is a must within your portfolio.
The Mexican financial sector is composed by 6 corporations, representing a 72% of the market share, also known as systemically important financial institutions. BBVA intakes 23% of the wholesale banking loan portfolio, Banorte 14.33%, followed by Santander and Citibanamex. It is fairly important to mention that Banorte is the only one of these worldwide recognized institutions that proudly say to be 100% Mexican and has the strength to compete with them. Also, compared to its closest peer, BBVA, we can see that Banorte has a strong presence throughout the Mexican territory.
The private domestic credit in Mexico represents only 37% of the GDP. Compared with countries such as Chile or Colombia, this is a low penetration. That is a great opportunity for the financial sector to expand throughout the country.
Our posture for Banorte stock is a buy recommendation, based mainly on 3 principles. The first one is Banorte's solid asset quality. The second, Banorte's excellent positioned business units. And finally, significant green, sustainable, and social practices.
As any other bank, Banorte faces many risks. Our team identified the 2 most important ones for the bank's performance in the next year. First, the COVID effects on macroeconomic and national conditions project reduction in the net interest margin to 3.6% in late 2021. This from a decline in net interest income due to creditors' low revenue in the short term. The consequence is a possible reduction in ROE. Also, the central bank first half estimates present an increase in non-performing loan rate levels of 33% for corporate, 19% for mortgages, and 32% for consumer credit lines. There is also a 15% adjusted NPL level for credit cards and payroll loans. All of this is systematically exposing the earnings of the bank.
So now, Uriel, let me show you how Banorte's first principle will offset these risks. After the COVID-19 threats, it was challenging for the shareholders, investors to assess the real impact of the pandemic on the delinquency rates and the performance of the bank. So Simon, why is Banorte's asset quality a reason to invest?
First of all, Naoki, Banorte has a consolidated significant key player in the top banks in the Mexican market due to its financial performance. Banorte manages a first half 20 ICAP rate of 19.66%, outperforming its G6 peers and the system benchmark, which is 16.51%. Moreover, Banorte has increased its portfolio by 9.90% annually on average in the last 6 years. Nevertheless, as we can see in the graph, even though Banorte has increased its total loan portfolio, asset quality remains in optimal margins. On a year-over-year basis, Banorte decreased its government credit lines in at 13%, while increasing its corporate loans in 14% and mortgage and commercial credit lines in a 9% respectively. This means that Banorte's total loan portfolio perspective follows a diversification strategy in order to maintain constant interest income for the future.
Shortly after the lockdown and in September, the government entities released a relief program for the banking sector to ease the financial pressure of the debtors. Furthermore, Banorte doubled its provision from loan loss year. The provision covers the impact of COVID-19 for 2020 and a relevant portion of 2021, for which we may discard an upward trend in the provisions. Therefore, the bank has managed to lower the delinquency rate from 1.88% to 1% in a year-over-year comparison, with an expected loss being stable over the year. In addition to the better loan performance, expansionary monetary policy has lowered considerably the cost of funding. Hence, Banorte has demonstrated higher safety and higher return for the investors, complying with an annual ROE of 20%, reaching a higher rate than its peers. We consider that the market has not fully incorporated the safety of the solid asset quality and the resilient profitability in the share price.
The second strategic point to consider a buy recommendation is the fact that Banorte has a strong diversified business unit structure, where most of its conforming subsidiaries play an important role in the market.
Banorte is the second largest bank in Mexico, with 14.3% of the total loan portfolio, offering commercial, car, mortgage, credit card, enterprise, and government loans. Also, for August 2020, the bank had the second place in net income after BBVA. Banorte is placed at the lowest NPL level of the market, with 0.80% compared to a 2.5% benchmark.
Banorte Ahorro y Previsión has a market penetration of 7.7%, placing this company at a fifth place in the Mexican insurance market. It is important to note that along the year and through Sura's annuity portfolio acquisition, this subsidiary has had a 44% growth.
Also, Banorte's pension fund, Afore 21, has the largest amount of managed accounts in the market and grew from January to September by 12%, setting this division in a great competitive position.
All the services strengthen Banorte's cross-selling efficiency, having at least 2 products to hire per customer.
So, Miriam, as a fund manager, are you finally convinced to invest in Banorte?
Its financials are solid, but what about the ESG? According to the OECD, there is a growing evidence that investors are increasingly factoring ESG assessments into investment decisions.
Totally agree, Miriam. Let me show you what Banorte has done. You'll be amazed. First, it donated 630 brand new houses to the 2017 earthquake victims. It also has contributed to the construction of a solar power plant, the refurbishing of Playa del Carmen, and the development of a wind farm.
For these efforts, Banorte has been recognized for the 9th consecutive year as a socially responsible company and belongs to the FTSE4Good Emerging Markets LATAM Index since 2017.
Banorte outperforms the Mexican laws regarding corporate governance. 71% of the members of its board of directors are independent, while the requirement is 25%.
Banorte has 4 main committees. Under the Risk Policy Committee is the Sustainability one, which is in charge of the environmental affairs.
All this sounds great. However, Banorte has a problem: gender gap. The more the level in the corporate hierarchy increases, the less women participate and the less they get paid. Although 50% of the employees of the company are women, less than half managerial positions are occupied by females. Moreover, the board of directors has only 1 woman in it out of 14 people.
Banorte is fighting gender gap through an ongoing mentoring program for women that encourage their growth in executive positions.
All this materializes on the great scores that Banorte has received from top analysts on ESG, all above 80 out of 100, and prominent compared to BBVA Global. Our target market price is based on 3 valuation methods. First, the excess returns valuation model considers information from the third quarter of 2019 to the end of the second quarter of 2020. It forecasts the excess returns the company will have on the following year based on its current net income. And the output of this model is a target price of 108.1 pesos.
We used the Gordon growth model using price-to-book ratio because we wanted to include the long-term ROI and the projected equity in the valuation. This model gave us a price of 135.98 pesos.
Finally, we use a weighted average of 3 projected financial ratios: price to earnings per share, price to book value, and price to revenue. We use a growth rate for the projections and we compare them against other banks. The model gave us a price of 80.83%.
A weighted average of these 3 models gives us a target price of 108.29 pesos.
1 minute.
In fact, our estimation shows that the income along with the net income will recover gradually from the next year.
Let's recap its 3 main points for our recommendation. First, Banorte has a strong asset quality as we saw previously. Second, Banorte's subsidiaries have a strong competitive position within the market. And last but not least, Banorte is a leading agent, not only it's in the industry, but also in the socially and ecological, and is a corporate governance role model. In conclusion, Banorte is an institution that navigates with protection and creates constant revenue and growth, representing a solid opportunity for investors. Thank you, and we'll be honored to answer your questions.
Thank you very much, guys. Good job. I will restart my stopwatch, and I will open the floor for Q&A for the judges, and I will restart the time watch at the count of 3. So 1, 2, 3.
If I may, let me start with one. What is the downside? What concerns you the most with Banorte?
Sorry, could you repeat the question? The audio kind of cut.
Sure. What is your downside scenario? What concerns you the most with Banorte?
With Banorte, mainly the downside is mainly derived from the first half 20 financial report, sustainability report from Central Bank, which includes mainly the recovery from the Mexican economy, derived from mainly the US economic recovery, the oil industry demand, and also the projected performance of creditors' income. So mainly those derive to a worse performance as a bank, but all of them are estimates mainly from the Central Bank in the first half 20.
And also, if I may say, the gender salary gap is really high, and this may have impact on the way investors see the company.
Great, thank you.
Okay, I have a question. The banking industry is an industry which is low margin. The net interest margin is 3%, 4%, 5%. So a bank depends on leverage, a high leverage to make money. Usually banks in developed countries have leverage of anywhere between 8 and 10, up to what the regulatory authorities will allow them. But in Banorte's case, the leverage is only 5 times because the capitalization is very high. It's almost 20%. So therefore, the bank depends a lot on the net interest margin to make money. And that net interest margin is good, quite good, as you point out. However, don't you think this net interest margin is exposed now with rates going lower and possibly even staying lower for a long time? The lending rates?
Yeah, basically, to answer those questions, I will start from the point, we analyze historic performance of the bank, mainly on turbulent economic periods based on 2008 and its response and performance throughout the years corresponding to the next years. So, and the performance was quite interesting because the more impact was on the next year, on 2009, And even though interest rates rebounded until 5 years later, starting from 2008, the bank started creating income and value, even though mainly attributable or driven by the fact that creditors, Mexican economic activity started like moving forward after the impact. So it really started creating value. And nevertheless, despite the interest rate rebound, creditors starting to get purchasing power and higher incomes. So that was the ability to maintain a great performance during the next periods.
Another factor that we can include here is the credit expansion, the credit portfolio expansion. Except for the government loan, the bank has been able to expand its portfolio throughout the years. And we think that this will offset the decline in the interest rates dictated by Banxico.
And also,
sorry, go ahead.
There's also the fact that the credit risk and the asset quality of the bank is usually very stable. So we consider that's a factor that can help the bank to withstand the adversity in the economical conditions.
Okay, thank you.
One quick question. Thank you for your presentation. It was quite interesting. What are the strategies for the bank for next year in face of the pandemic? Maybe is there anything you can tell us about the digitalization process that the bank is going? Strategies, please.
Well, first of all, Banorte has made a new strategy and new alliance with Rappi. This was a few months ago, and what they want right now is to strengthen their digitalization strategy and their strength because of what's going on right now in the pandemic. So they're investing in that way to expand and to continue to get to customers through the online market.
Also, in addition to what my partner said, it is very important to mention the diversification of the total loan portfolio. I mean, the tendencies, the government loans decreased in a 13%, but actually mortgage, commercial, and consumer credit lines increased, and actually all of these credits or loans have a significant weight in their portfolio. So actually they totally offset the decline of this government. So actually they are creating a good strategy according to portfolio performance.
That's exactly what I was looking for. Thank you.
What happened with the price of the share of Banorte if the Mexican government could lose the investment grade, please?
So actually, sorry.
Well, it will certainly have a very negative impact for the share, not only for the revenue and the possible clients that it will attract, but also in the sense that many of these bonds and debt outstanding will have also a negative effect that would increase its cost for the company.
Nevertheless, it's pretty important to mention that a couple of minutes ago, they already established the grade, and they didn't decrease its credit grade. So it's actually a good news for the Mexican economy and also for the bank performance.
Thank you very much.
What are your assumptions for the NPLs, the non-performing loans for next year? Can I see your numbers, please?
Yes, we can change the slide maybe. Well, the assumption that we have used is that first, the relief program has enabled to apply a deferral of payments to 4 or 6 months for the debtors, up to 18 months for the credits directed to the agricultural sector. So this has enabled to lower the non-performing loans, as well as that the banks can have a lower amount of reserves. That the liquidity and the capital buffer allowed is lower for the banks right now. So we think that this decline will continue or stabilize through the years until the pandemic effect ends and the economy starts to expand again. But this relief program has meant a lot for the bank to enable it to have a very good performance on the loans, and it enabled the bank to have a resilient profitability.
Okay, I agree with this now, but maybe the next quarter, I mean the first quarter of next year and maybe the second quarter, is not going to be the same because this relief program is the firm of the payments, and maybe when you have to register your non-performing loans, you have 90 days to register this. So if the program ended in September, 4 months after or 3 months after, there's going to be an increase in the non-performing loans for the next year. So I was just wondering about what were your assumptions on these non-performing loans. But anyway, we have to watch out because next year is not going to be as beautiful as this one.
Okay, I have one more question.
1 minute.
One more question. One more question. You know, most analysts, when they look at banks, they tend to give a less importance to things like excess value or to discounted cash flow because they're very difficult to define. You know, when you're valuing banks, it's not like a manufacturing company. Most analysts therefore look very strongly at price to book value. Why do you guys give so much importance to the other two factors which are not book value, excess value, discounted cash flow on this?
Well, actually, for the excess returns valuation model, we use the book value of equity, and we discounted the cost of equity from the net income. So we gave that model the highest weight on our valuation because we thought precisely what you are saying, that the bank creates value on its equity. But we also decided to give certain weight to the other models because we had to evaluate the effect of long-term ROE and also its action.
Return on equity?
Yeah.
Sorry to interrupt. Time, guys. Thank you very much. I will pause the recording.
Sí, muchas gracias.
Pues yo ya estoy listo. ¿Ustedes también?
Ya, bueno,
Sí.
Listísimos. Empezamos.
Pues 1, 2, 3.
Imagine a beautiful house. The architecture is sleek, elegant, and perfectly executed. Interior design is both tasteful and harmonious. Life in this home would be perfect. Now picture this house in the middle of an insecure, troubled, and uncertain neighborhood, but with systematic and structural problems, most of which have not been looked at for decades, while others are much more recent. Grupo Financiero Banorte is this beautiful house. And Mexico, unfortunately, with its current economic conditions, is not an ideal neighborhood for banking, which is why we will now present why we issued a sell recommendation on Grupo Financiero Banorte based on the following key drivers.
Mexico's rough economic environment, drop in Banorte's main source of income, insufficient credit appetite in the market, lack of geographical diversification, and restrained technological transformation.
Grupo Financiero Banorte, also known as Banorte, it's a Mexican financial institution considered one of the leaders within the industry. Through its multiple subsidiaries, Banorte offers its wide variety of services to individuals, small and medium enterprises, companies, and the government. It's important to mention that Banorte only operates in Mexico. However, it competes with local and international banks. COVID-19 pandemic turned to an economic crisis affecting financial services industry. As a consequence of lockdown and suspension of non-essential activities, individuals' income decreased. Consequently, credit quality deteriorated and the risk on default on payments increased, impacting on banks' financial health. Banxico has taken measures to encourage aggregate demand, but this has not been enough to reactivate the economy. Digital transformation has become fundamental for banks to keep competing in the market. On the other hand, due to COVID-19 pandemic, Mexico has been forced to develop its strategic development on digital transformation, but there's still a long way to go.
Banorte has competition from local and international banks, which we grouped in 3 tiers. Tier 1 represent the international banks with the greatest participation in the Mexican financial sector. Tier 2, composed by the banks listed in the Mexican Stock Exchange, giving a fairly homogeneous operating models and capital structure of Mexican banks. Finally, Tier 3 represent Latin American peers based on a comparable beta using the S&P 500 as a benchmark.
Banorte's net interest margin, also known as NIM, has been rather stable over the past few years. As of 2019, they reported a 5.46 NIM. In the left graph, we can see historical movements as well as the forecasted percentages we calculated in our model. However, we believe this NIM will drop due to the cut in interest rates, which will affect Banorte's net income. Over the years, return on assets has been gradually increasing, reaching its highest peak in 2019. The same can be said for return on equity, although not in the same proportion. This has been driven mainly by increase in net income. It is quite clear clients will be much more mindful of their credit and spending habits, as they have to be prepared for the ongoing consequences of the economic crisis. Nevertheless, Banorte has capital levels kept rising, and they have fully exceeded capitalization requirements established by Banxico and international regulations of Basel III. In the left pie chart, we can see the percentage of loans allocated in each segment of the company's portfolio. These had all been slowly rising since 2015. However, from 2018 to 2019, there was a noticeable drop in commercial, corporate, and government loans, which was mildly compensated by the rise in consumer loans. And out of the total bank portfolio, only 1.65% of these loans were non-performing loans. However, even though they might be controlled right now, we believe these levels will rise in 2021 as the real effects will not be seen because Banxico implemented measures which Banorte announced to its clients they could defer payments for mortgage and commercial loans for up to 4 months. In this slide, we highlighted the risks we believe are the most important ones for Banorte's operation, for which we created an impact and probability matrix. Here we wanted to highlight the country's risks of economic contraction, being the one with the highest impact and the highest probability. Considering this, we also wanted to mention the dependence Banorte has on Mexico's credit rating.
To complement our analysis, we evaluated ESG risks, mitigation strategies, and opportunities. In our analysis, Banorte received an A rating, which is the second highest in our scale. The 3 key drivers of Banorte's strong ESG profile are the efforts related to data privacy and security, the well-qualified board members, and the incorporation of environmental factors on the decision-making of the company. We created a framework that incorporates material ESG factors for the financial services industry. The weighting of this factor is determined by its materiality. We also did a qualitative assessment that takes into consideration current events and ESG trends. In our research, we found that MSCI, a leading ESG research provider, identified a negative correlation between the cost of equity and ESG profiles of the companies. As the integration of ESG into evaluation has become a best practice, we then incorporated the ESG rating into our model. We did this through an adjustment factor to the cost of equity, which we will further explain.
We estimated Banorte's stock price with a combination of a dividend discount model with a weight of 30% and a multiple analysis valuation with a weight of 20%, resulting in a target price of 88.92 Mexican pesos. Our dividend discount model took in consideration 3 main pillars to forecast Banorte's future dividends. Our first pillar Mexico macroeconomic environment, given Banorte's strong relationship with Mexico's government, taking in consideration a GDP contraction, interest rates drop, increasing money supply, and increasing inflation. Our second pillar, Banorte's strength and performance, considering a stable deposit market share, increasing in non-performing loans, a drop in the NIM, and stable provision expenses. Our last pillar, Banorte strong dividend policy, taking into account a solid dividend payment supported by 17 years of dividend payments, a high dividend of 16 to 50% according to Banorte dividend policy, and no dividends in 2020. After we estimate the future dividends, the present value of the dividends were adjusted by a cost of equity, were discounted by a cost of equity adjusted to ESG. Originally, we calculated a cost of equity of 11.88%, which was then adjusted by a factor of 0.98, given Banorte strong ESG performance. As a result, we obtained a lower cost of equity of 11.61%. With these modifications in our forecasted dividends, we get a stock price of 89.93 Mexican pesos.
For the multiple analysis, we use the peers from the 3 different tiers, to which we assign a 20% of the weight to the overall valuation. We use the PE and price to book value multiples. As we can see, the PE multiple of Banorte represents a 10.75% downside to the comparable set harmonic mean. This multiple reflects the importance of the bottom line earnings in driving value for banks, and also shows how much the investors are willing to pay for future earnings. On the other hand, the price to book value multiple represents a 27.66% premium to the comparable set mean. We gave 50% of weight for each multiple and obtained a price of 84.87 Mexican pesos.
For all these reasons, we can clearly picture the beautiful house we mentioned in the beginning. We understand context matters, and unfortunately, Mexican current economic conditions are not ideal. As a matter of fact, they might be downright hostile. The market might not be considering this small yet significant observation, which should be priced into the stock, which is why our valuation model recommends a sell price of 88.92 Mexican pesos. Thank you, and the floor is now open for questions.
Well, thank you very much, guys. It was a good job. I will just restart my timer. And then I will open the floor for question and answers from the judges. So we're starting 1, 2, 3.
Okay, one quick question. How did you calculate you gave a risk premium in your discount model of 10%. How did you arrive at 10% risk premium?
Well, we calculate this risk premium using the 15 year, using the returns, the yearly returns of the IPC, of the 15 years, and we obtain a 10.13% risk premium.
Okay, thank you.
You're welcome.
Another question about the valuation, the factor that you use in the ESG factor. What you obtain this factor?
We obtained this factor through a paper from MSCI that suggests the correlation between the ESG profiles and the cost of equity. So, Danny, can you go to slide, can you move on to slide?
The valuation
yes.
page.
Yes, which slide?
I think it's the 34. 34. Yes, so we considered the difference between the cost of capital, because this relationship it's maintained the same for the cost of debt and the cost of equity. So we took the difference between the cost of capital of the strong ESG performance companies in the financial sector from MSCI Emerging Markets Index and the low ESG performing companies. That it's the 1.06.
Thank you very much.
Welcome.
Okay, I have another question. Do you think, Warren Buffett says that a really great company is a company that has a sustainable competitive advantage, something that other companies cannot copy, that they really have something very, very different from their competitors. And Warren Buffett calls this a moat, una fosa. Fosa is moat. Do you think that Banorte versus its 5 main competitors in Mexico has a moat, or does it not have a moat, following Warren Buffett's definition?
So we definitely believe that compared to its peers, Banorte outperforms, especially because Banorte, as we mentioned, only has operations in Mexico, and most of its peers are international banks, which have operations in other countries. So we do believe.
What does it do differently from the others? What makes it so great versus the others? I mean, the other banks have great customer relationship management. They have great IT. They have loads of money to spend on information technology. Their funding is good. I mean, what is really different, unique about Banorte? Now, I'm not talking about performance. I'm talking about overall, long-term, sustainable competitive advantage strategy.
Well, one strength of Banorte we identified on the ESG assessment are the well-qualified board members, as 50% of the board members have industry expertise. 71% of the directors have financial expertise. Apologies. And for accounting, 21 of the board of director counts with accounting expertise. So we believe that this drives the company to take better decisions.
Complementing Mariana, at the end, Banorte is a Mexican bank, which is which is the key difference between its greatest competitors. This bank is directed by Mexican people who already know the Mexican market. They know their clients.
Okay, thank you very much.
Question. Thank you for the presentation. If you were to sit with the board of directors, what would be your advice on next year economic environmental situation in Mexico? What would be the strategies that you recommend the bank to take?
So we believe.
Go ahead.
So currently, Banorte's forecasts are in line with our own regarding interest rates and inflation. So we believe that they are preparing for next year and they know what's coming. But still, there's some factors that they cannot prepare for. For example, what we mentioned, that its operations are only limited to Mexico, which is impacting considering their peers. But we do believe they are currently in line with expectations and are trying to mitigate risks. As we mentioned, for example, Banxico's policy, which they implemented, clients could defer payments for up to 4 months. But still, next year is going to be, we believe real effects of the crisis will not be seen until the 2nd or 3rd quarter of 2021.
And to complement Daniela's idea and to respond to your question related to environmental decisions, we believe that the company should not focus on the environmental pillar that much, as it has not a big impact on the materiality on the financial services industry. The company should rather focus on improving the board's diversity, as the board lacks of, as the board has only 1 woman in board that represents at 7% of the board, and also lacks of women executives.
Okay, thank you.
One for me, please. How would you explain that Banorte has been the best performing bank in Mexico in terms of the stock price in the past few weeks or months. It was not performing well before, but when news came in about vaccines and Biden and this risk on that we're seeing everywhere, now it's the best performing stock among banks in Mexico.
I think something that we need to take in consideration is that the stock market in Mexico is very little. So when a company shows good news, almost all investors invest in that stock. So as we can see, Banorte's stock has a lot of volatility. We can see a lot of spikes and downs in that from November to December of 2020. So even if an investor is having a good performance, we also need to take in consideration this volatility, because a normal investor will be affected with this kind of volatility of a stock.
Okay, thank you.
Do you have any chance to compare your NPLs assumptions with the ones that were experienced in 2008, maybe 2012?
Can you repeat the question, please?
Yes. Do you have the chance, or did you compare your NPLs assumption for next year with the ones in 2008 and maybe 2012? Both years were very, very bad in terms for NPLs in Mexico.
In our non-performing loans assumption, what we more take in consideration is 2020, like period.
The worst case scenario?
The worst case scenario, 2021, right. Because the problem is that with the measurements that Banxico has been made now, we haven't seen the real scenario. Like, we only have postponed this scenario, so that is why it's the main reason why in our model the increase in non-performing loans is in 2021.
Okay.
Thanks.
There's 30 seconds left, so I don't know if you want to make a final question or we close.
Yes. What could be happen with Banorte if the Mexican Congress put a limit commission in the Afore, because the Afore business is so important for the group?
We know it accounts for almost around 25%. We do think that this could bring the, I don't know if your question was regarding the stock price or overall performance.
Yes.
We believe this will bring the stock price down, because as my compañero Guillermo mentioned, for that 52 range, minimum and maximum, the minimum was 58 and maximum was 118. That is a 104% change. So here we can see this is a very volatile stock. Oh, I'm sorry.
Yeah, sorry.
Okay.
Just to make it fair.
Yeah.
Thank you very much, guys. Yeah, I will stop the recording now.
Thank you.